Hey there, good morning, folks, and happy Saturday to you. Hope you're having a fantastic weekend. Coming at you live with this week's market wrap video. Last couple of weeks, I've been fairly bearish on the markets, and as you know, I raised cash in both my swing account and my long-term hold account. Uh, Booked some profits and put myself in a position that if we get a fairly significant sell off, I've got some ammo to start doing some shopping if things that I'm interested in hit my value area and I can start rebuilding. So, you know, I've been concerned about the markets and I remain concerned about the markets as we move forward. And I think it's really important to emphasize the fact that cash is a viable position. You do not need to feel like you need to be fully invested at all times, right? You don't have to day trade every day. If there isn't a good setup, if you don't have a position or something that is giving you a really favorable risk reward ratio, then you don't have to feel compelled to trade. Sitting on your hands, sitting in cash is a very good position to be in when you're in a market of indecision. And I think next week we could get a clearer picture uh, of exactly what the markets want to do. But I will tell you this, to my eye, it appears to me as though uh, we are in for some rough waters ahead. So let me just lay out my thesis. So last week we got the jobs number and the employment number, and it came in a little weak, and that was a good thing supposedly because that means we're at full employment, and I think that is just a crock. Okay, if you look at the earnings, you listen to the conference calls. Uh, a lot of these companies are making their earnings, or they're hitting the earnings number by capex reduction and cutting their workforce. The revenue continues to come in light. And that is a sign that these companies are not growing. So, and then we got a jobs number this week that came in, or jobless claims number. Let me re-emphasize here. Jobless claims number that came in a little hot, right? And that makes sense because people are, these corporations are making cutbacks, they're trimming jobs, and those are starting to filter in. And that is a very concerning thing to me. So we're in an earnings recession and we're seeing jobless claims starting to tick up. Gold has been going absolutely bonkers, and that's considered to be a safety trade. The top performing sector in the markets has been utilities, which is also considered to be a flight to safety. So there are some things out there that are pretty darn concerning. Oil industry, energy, has made a pretty nice little bounce back, but you know, we're still seeing, I think we saw what, two or three bankruptcies in the space this week. And I think we've seen over somewhere around 60 or 70 bankruptcies so far this year in the space. These are not positive trends. And I'm not trying to be, uber bearish. I'm just pointing things out. And then if we look at the charts, it we are in a short-term downtrend. Let's look at this XRT. So last week, it was a big deal for me because of the fact that we had broken below the long-term trend line. This is the dominant long-term trend. We broke back below. We pierced it back here from December through February. Got a nice little bounce. Come back up into this trend line and failed again. And we closed basically right at the low of the day on Friday. Now we've got a big week coming up ahead of us. We've got the big box stores. We've got Home Depot, Walmart, Costco, TJ Maxx, some of these big box stores that are going to report. Now listen, If Home Depot comes out, crushes it, and raises guidance, then we could see a pretty nice little oversold snapback bounce in the XRT. But we've got a long way to go before the XRT would give us any indication that it's anything more than that, anything more than just a really short-term snapback play. Okay, it would have to break back above this trend line and start looking to make higher highs. And I just don't see that happening, not with the guidance that we got from some of these retail outlets. Okay, so that's concerning for next week. We need to pay close attention. Like I said, doesn't mean we couldn't get some short-term trading opportunities in this market. I mean, if Home Depot does come out and beat, right? I mean, let's look at this though. Look at where this would be a perfect place to fail, right? I mean, either break out or fail. I mean, it's right at resistance. It has had a nice little run up into this earnings report, right? Here's the daily on it. So I would just suggest that we may get a little bounce if they come out and surprise. I think Home Depot would be one of the better ones to be able to do that just because we're in the springtime season. So could get a bounce in that realm, but I don't know how long it would be able to sustain. So let's look at the transportation sector. Actually, let's go to the IYT because I actually like looking at that one a little bit more. So the IYT transportation sector, listen, we broke below an area of potential support, right? And again, this is another one that we closed nearly at the low of the day on Friday. These are not healthy signs. These were two of the sectors that were leading us lower from December through February. And it looks as though they're doing it again. And just from looking at the trend, right? Here's the trend line. We are in a downward trend. We may find some support somewhere around here at this 131 or 132. Let's back out to the weekly. Another one that we are potentially getting ready to test the dominant long-term trend. If we break below this, we break below the 200-week moving average, I think it could get ugly quickly in the space. So it's another area that is concerning. All right, so let's go to the IBB, which has been a weak space. We had a little hope over here where we thought maybe we might be getting ready to bounce and maybe potentially test this trend line here, and we wound up breaking down below this area of potential support. Now we are again fast approaching the dominant long-term trend. This trend line here that has basically been intact since 2011, right? And so far it's acted as support, but we are testing it once again, and we're testing the 200-week moving average. So we're in some critical areas in several indexes. Does this mean that we can't, that we can't get some kind of a bounce? We could get some kind of a bounce, and I would be interested to see how intense that bounce is. But to my eye, we have started a new trend. And if we break below this long-term trend, we may not find support until somewhere around this 212. Okay? Let me go back to the daily on this. I mean, look at the slope of all the shorter-term moving averages. They're all sloping down. The 200-day is still sloping down. There really just isn't a lot there that says that this is getting ready to make any kind of a significant turn. So I would be careful in the biotech space. IWM. So 107 is where I've got an area of potential support. right? We actually we closed right at this 109, okay? If we continue to break below there, if we continue to break below 109, 107, we need to see that act as support. If that fails, let's back this out to the weekly. Look at where we're at. We're testing the long-term dominant trend again, right? If we break below this 107, we test the 200-week moving average, things could get ugly fairly quickly. Let me go back to the daily on this real quick. Let's see if we can determine some. So I'm gonna use a Fibonacci retracement right here. You know, the thing that is concerning is that, or not, I shouldn't say concerning. Okay, so look at where this is at, right? Wait a minute, hold on a second. There we go. All right, so isn't that kind of funny? So we got 107 is where I was thinking we may find some support. If this area doesn't hold, then we could break, then we could head a little bit lower, and then the next area really becomes 103 for me, right about 103.50 in that area of potential support. But there's your Fibonacci retracement. So we get a 38.2% retracement on the IWM right here at 107. If that breaks lower, I think it get pretty challenging. So let's take a look at the S&P 500 real quick. $204. So we've been talking about this 204 area as being an area of potential support. Now, what I want to show you here, I've been using this Arun indicator, and basically it's an up-down indicator. When you know above or below the 50 point, which would be the 0 line, and then the red is of course down and the green is up. So when you see a cross like this right here, right, we saw a cross with the green up and the red down, and as you can see, we had a really nice run right up to 2100 after this cross, and the green stayed up in this range, right, in the higher range. Well, if you look at it now, we're getting ready to cross. We just crossed, right? We've got the down, which is rising, and we've got the up, which is declining. And if this gets down here and this stays up here, then you're looking at the same, potentially the same type of move, but in the other direction, right? So that's something that I do pay attention to. Now, this does not guarantee anything. Everything is lagging indicator, but I'm just looking at things that kind of point us in the direction of what could take place, right? I'm looking for any kind of signals that may indicate we're in for some rough waters ahead. We closed nearly at the low of the day, or we did close at the low of the day. Now, nearly at the low of the day, okay? If this if we take out 203, we get down here to the 2030, 2028, which is 100 EMA, and then we come down, of course, and potentially take out or test the 200-day moving average, which is at 212. But I'll tell you this, I think, or 2012, I think we're going to likely come down and test 2000. If 2000 fails, you know, we could go down and test the 1960 range. So S&P 500 not looking too healthy. TAN, solar sector. So we talked about the solar sector a couple of weeks ago. Thought maybe that this might be an area where we would find some support at this trend line here, the shorter term trend line, maybe bounce a little bit. My thinking on TAN was that, you know, as oil was climbing, if you think about the correlation that solar and oil had during oil's decline, right? Solar was taken down with oil because as oil was becoming cheaper and cheaper, it was like, okay, well, if oil's so cheap, what do you need, alternative energy projects for, because oil's so cheap. And solar was getting taken down with oil throughout that time. So the thinking was is that if we started to bounce in oil, then maybe solar would go with oil, right? As oil rises, uh, solar would kind of tag along. The problem is it's such a leveraged sector. You had the Sun Edison bankruptcy, and a lot of these companies within the solar sector are just really, really leveraged. And that trade or that thesis did not play out, and solar looks as though it actually wants to head lower. So let's go to, so we've talked about the SPY, we talked about IWM, we talked about IBB. Let's talk about gold. What is gold telling us, right? This is that safety trade. So, it's in an interesting area of potential resistance, pulled back a little bit. This is where the volatility has been, right? This is where, look, if you want to find something that's got some quick, some significant moves, this is starting to get pretty sloppy, right? This is starting to get pretty sloppy. Had a tremendous run in JNUG and Nugget, right? But look at the travel within these candles within a day, right? From 175 to 150, right? From 157 to 127, $30, right? From 140 down. So look at the size of these candles. Now it does look as though you're kind of tightening up a little bit here. But the question now becomes: are we starting a new turn here in JNUG? This is a huge move from February, right? Getting some pretty sloppy action. We'll see if we can tighten up and consolidate before we make another move in either direction. But that is where there's been some pretty significant action. Nugget, JNUG, gold looks as though it could be consolidating potentially for another move higher. We'll see. We'll see how it plays out. Junk and high yield, right? Had a nice little run. Could be getting a little tired here. Looks like you got some distribution down here. Let's take a look at this HYG. Right? Looks like maybe we got some distribution going on. So I would be careful in the high yield space. I don't talk about it very often, but a lot of the emerging markets, right? Here's the EM, looks fairly weak, right? EWZ, where is that one at? Right there, right? Looking a little weak. EWZ, Brazil, a lot of stuff going on over there. So I would be cautious in that area, in that realm. Hack. I don't know if I talked about cybersecurity already or not. See, I'm starting to lose it. But we had some news that you would have thought would have impacted hack and cyber in a positive way. Swift Bank or whatever it was that got $81 million theft by cyber. And the sector didn't really respond. And if the sector was going to respond, you would have thought it would respond to news like that. So it still looks fairly weak, and I would be cautious in the space. Real quick, just take a look at the T2107, T2108. We are consolidating a little bit. This is percentage of stocks above the 200-day moving average. If we do roll over, you're going to see this come down fairly quickly. And last few weeks I've been saying, look, we are in the nosebleed section in this T2108, the percentage of stocks above the 40-day moving average. I was suggesting that it was time to lock in some profits if you had them. And it certainly wasn't time to start loading up on swings when you were up in this nosebleed section. So we pulled back to an area of potential support, right? This is kind of like the middle zone. It's acted as support. It's acted as resistance. We actually broke below it on Friday. Look, if things really roll over, we could easily come back to. Remember, not too long ago, we were down here in the single digits, right? And this is when we were saying, hey, this is the time to load up. And we've still got a long ways to go before we come back down and test those single digits again. I mean, we could come all the way back down and test this 1360 area very easily. And that would not be good for the overall markets. Industrials, right? Oh, no, that's, hold on a second. XLI, there we go. Industrials pulling back a little bit. We are at a level of potential support, right? Price support. See how this was resistance back here? Resistance, support, right? Support. I mean, we're within this. It's really close here. And we closed nearly at the low of the day on Friday. So just a lot of sectors that look as though they could be getting ready to roll over. And if it rolls over, if they roll over, it's going to take the indexes with it. Another area that I really like that has held up the most, and let's take a look at that one real quick, is not that one. Definitely not that one. Hold on. XAR. Aerospace and defense has been really, really strong. And I would just suggest to you that a lot of the names within the space, Lockheed Martin, look, these things have had tremendous runs. They may continue to hold up just fine. But let's look at Northrop Grumman, NOC. Right, all testing all-time highs, really have ramped away from their long-term trend lines. NOC, Raytheon. Okay. This is probably one of the safest spaces to be in because no matter who gets in as president, they're probably still going to continue to spend on aerospace and defense. But they are, all testing, a lot of the names in the sector are testing all-time highs. Wouldn't be a big shocker if we saw a bit of a pullback in the space, okay? Let's see. XLU, like I said, there's the utility sector. Actually looking fairly good, like it actually wants to get ready to break out. Oil and gas. So let's talk about this really quickly. So one of the things that I've been saying is that pay attention to the strength of the dollar, and a very interesting thing happened on Friday. So if the dollar strengthens, that typically has not been good for gold. It hasn't been good for oil. And we had some strength in the dollar on Friday. And it is coming up into an area of potential resistance. And it actually came right up into there and pulled back. So it'll be interesting to see what happens with the dollar. If we pull back, close this gap, test this trend line, and then bounce, right? Or if we come back and break back below this trend line and maybe do another double test down here. But the strength of the dollar is something that we want to pay close attention to. If the dollar continues to strengthen, then you're going to see, I would think, weakness in gold. But we did not see that on Friday, right? We actually, gold held up and the miners held up really, really well, even though we saw some strength in the dollar. We'll see if that can continue next week. But I would be very cautious in the oil and gold space if the dollar continues to show strength. The thing is that June's not that far away now, right? And you're probably going to hear a lot more rhetoric. We already saw it last week. We had a couple of Fed members suggesting that the market is not prepared for what the Fed is prepared to do with interest rates. That the market doesn't seem to think the Fed can do anything And the Fed, of course, is jawboning the fact that we may see not just one, but maybe two, and one guy even said two or three interest rates before the end of the year. Look, there's only about 7 months left. You better get busy if you're going to do two or three. So if that happens, that could really put some pressure on the markets. That would strengthen the dollar and likely put some pressure on commodities. So right now, we're seeing kind of a reflation in commodities. Oil is still priced below where companies can make money selling oil. So, the energy sector had a nice little run. Let's take a look at it. Came up into an area of price resistance. Now we're pulling back. Can we pull? Where do we find some potential support? Back into this area, 62 and change. We need oil to continue to rise up into the $50 to $60 mark in order for these companies to make money. So we came up into an area of resistance. Could it pull all the way back and test? See, we broke over this long-term trend line. Could we pull back here and test right around 59? We certainly could. So XLF is another area that isn't giving us any kind of indication that things are really super healthy, right? Closed at the low of the day on Friday. If we break below 2274, it could get ugly in the financial sector. Maybe come down and test 22, somewhere in that range. And let's take a look at the home builders real quick. Home builders, materials sector, looking a little weak. We'll see if Home Depot, a lot of the home builders, and one of the names that actually, that I am watching is Beazer Homes. Just had the CFO pick up 16,000 shares at $7.41. But I would really like to get this thing somewhere down here about $6.65. I don't know if that's going to happen, but that is where I would like to get it. The home builders look a little weak. If Home Depot's numbers come in strong, you could see a little bounce in the home builder sector. So we're chalk that up in the back of your mind. And last thing I'm going to talk about real quick is volatility. Okay, if the markets do roll over, if we take out some of these key levels that are acting as potential support, if those break down next week, you're going to see some volatility come into the market. So you want to keep an eye on the VIX, right? You want to keep an eye on TVIX, right? And you want to keep an eye on UVXY. Pretty low. Haven't had a whole lot of volatility. If the markets roll over and you see some real fear, you're going to see a pickup in volatility. So this is a pretty long video. I don't want to drag this out, although let me bring up SMH real quick. Also at a key area of potential support. If this breaks below this 51 area, we could find some support at the 50 mark, okay? Maybe find some support there and bounce. That's absolutely possible. However, remember what I was telling you about that Arun indicator, right? When you see it cross up, look at that move that we had. So what have we recently seen? We've seen it cross down. And we're seeing the down up here. We're seeing up, head down here. If that stays this way for a while, you're going to see a significant move lower in the SMH. Okay? All right, I think that's enough. The sectors that, one last thing. I am still paying pretty close attention to the agriculture sector. So, it's the one space that I'm thinking if there is some kind of a sector rotation where some money might flow to. I know that this space had a little move last week because of the rumor about Mosaic being taken out, right? Or no, not Mosaic, Monsanto. Sorry, right? It had a rumor that Monsanto was going to get taken out. Big old spike there. That kind of helped the agricultural sector, but I just think it's a space that's kind of acting. It's acting pretty well, and it may be a space that we might see some money flow to. There's been a lot of insider buying in the space. Potash, right? Mosaic. Let's see, IPI. Right? There's been some insider buying in that space. CF was another one. Right? Actually, could be coming down and potentially doing a little double bottom test here. I mean, some of these aren't looking all that fantastic. What was another one that I was looking at? TWI, and then Joy Global. Right? So it's a space that I'm not super hot on it, but I am watching it. So anyway, that's it. I'm wrapping this up. That's my market wrap. I remain bearish. Coming into next week. We'll see what happens with these big box stores and what that does for the markets. But I'm still pretty bearish. I like being where I'm at with the cash position. And that's it. That's my position for the market wrap and sector watch. I will be doing a live session, Stocks to Watch, on Ticker TV tomorrow morning, 8 a.m. Las Vegas. I don't anticipate that I'm going to have a big list of stocks to watch since I am relatively bearish. We're in this area of indecision. We'll see if next week we get some more clarity on where we're headed in the near term. But I will still do a Stocks to Watch for next week, live on Ticker TV. If you have some stocks that you'd like me to check out, send them to me, email them, tweet me, and I will take a look and give you my thoughts in the Stocks to Watch video tomorrow. Okay? Las Vegas time, 8 a.m. Have a fantastic Saturday. I'll see some of you tomorrow morning, and the rest of you, I will see next week. Good luck trading next week.